Okay. Looks like that. Wait for the video to pop up over here. It takes about 10 seconds. Alrighty, there we are. Hello, everybody. Welcome to the show. It's Houston. We have a problem. Today we got a special guest. We have Always Sad But Truthful, who's going to try and parlay his knowledge of how the swaps work with GME, with Berkshire, with the entire market as a whole. What type of liabilities are out there? Is how massive these derivatives are, and how basically, if it all goes boom, just how screwed we all are. So let me throw the intro out there so everybody can see it, and then we'll get started. So here we go. Oh wait, intro's not showing up. There we go. Okay. Welcome aboard. You gotta mute yourself if you like. Welcome to the show. Oh.
That was
there he is.
fairly short intro.
Yeah. It's like 10 seconds. Done. So welcome.
This has been, even the past 30 minutes talking with you, I find it amazing how much I've been able to dig up with all this crap.
So just to let the audience know, I've got you up. We're up on your Discord page here. So I have your audio coming in on that. And as you talk, you're going to tell me to bring up certain either tweets or images, and then we can kind of go over what's on those. But I guess to start off, the most basic question I think most people have with swaps is, what's a swap?
It's so simple. It's such a complicated, simple question. In short, it's ways that institutions can share things that they own, whether it's cash or assets, with each other. And generally, a swap is level 2, so it's not reported the way that options are.
Mm-hmm.
Let me adjust my voice mic. I see me triggering right now. I'll put volume. How do I make this?
You look good on my end.
Okay, well, you let me know if it glitches out or anything.
Okay.
Hypothetically, and this is, I think, I'll just rewalk what we had just talked with, is that say you have 100 shares of a company and you are just a hedge fund.
Yep.
I need to use these to play options or to create some kind of a price bet on the underlying derivative.
Okay.
Essentially, I can borrow it from you and give you premiums to borrow it, whether that's daily, weekly, or monthly.
Okay.
And in the scheme of that, there's other ways that we can set up those payment plans. Total return swaps are, say that I need to borrow those 100 shares just for the function of creating options.
Yep.
Well, then I can just give you all of my profits at the end of our contract. All of the returns, I'm totally going to give those back to you. And then in terms of Archegos, those were that same form of swap. They were a total return swap, but they were set up to where no payments were to be made until the end of the contract. That way we didn't have to report any part of that position in our material reportings.
Okay.
So it gets even more hidden, because most of us will look through a fund's annuals and we'll try to figure out what swaps they own and the details of it. But that's the basis, is how an ETF, or why an ETF is profitable to begin with. They own a bunch of things, and they figure out payment plans to give it over to other entities.
Okay. So like the
Yes.
ETF has, their, say, 100 different companies based in the ETF that they're trading, right? And somebody wants certain shares out of the ETF. The ETF can sort of like pass those shares on with a promise that the profits will be sent back to them at some point.
Well, I think yes and no, because I think there's something to be said about the different kinds of funds.
Yeah.
When I did the GameStop swap DD, I realized that we've been talking about ETFs for a long time, but nobody ever talks about mutual funds.
Yep.
And they don't talk about the difference of hedge funds, mutual funds, and exchange traded funds.
Yeah.
the three funds to focus on. And with that said, the hedge fund generally has a contract with the prime broker to share everything it has. And the prime broker, as an authorized participant, can do certain things with whatever the hedge fund may own. If it's an ETF position, they can redeem the ETF for anything the ETF holds.
Okay.
If it's a mutual fund, kind of the same concept, except it doesn't exactly face any of these other regulations. Mutual funds are kind of free floating in the market because as ETF regulations have been applied since Dodd-Frank onwards,
Yeah.
mutual funds are just kind of those hidden uh, thing that nobody wants to discuss. And the
Yeah.
GameStop swap, all of these types of swaps were being played by mutual funds, and I didn't really focus too much on hedge funds or ETFs.
Yeah.
It was about the mutual fund placement and how ETF regulations don't apply to those
Hmm.
because they're essentially passive investment vehicles.
Yeah.
They buy the indexes and then they just, you know, make slow returns on the long run. They're more Buffett style.
Yeah. Yeah. Because I mean, the mutual funds are the fuddy duddy boomer stuff. Like they just buy a bunch of stocks and they sit on it, and they lend out their shares to make some extra cash, and the returns aren't as big because they don't doing any fancy instruments with it. It's just kind of when people don't even talk about investing in mutual funds anymore. They just ignore them and almost.
Yeah, it's a key ingredient, honestly, to the pension funds themselves,
Yeah.
because as people accrue their pensions, they generally they go into mutual funds, not other riskier investment vehicles.
Yeah. Hmm.
It's an interesting thing to try to really understand all these institutions and how they share things in the background.
Yeah.
Um, and as I went into these weird things I had found called contracts for difference, essentially they're level three derivatives. Just like an options play, it's just a price bet.
Yeah.
Um, but they're in the swap records to where, unlike options, you can't exactly see the order book in a transparent way,
Yeah.
you know. And but the tricky thing there was a hedge fund in London operating in London Stock Exchange that was swapping using Goldman Sachs to a mutual fund here. The mutual fund here was redeeming the CFD to play options, resulting in FTDs, but it would then loan it to a bank, like specifically Bank of America, so that they could then short the instrument. And it's so that each entity can profit off of a real simple mechanism.
Okay. So you have a hedge fund in England. It is it's giving collateral to Goldman through the mutual fund, and the mutual fund's lending that out. Is that how I'm understanding that correctly?
Technically, Goldman would be the central counterparty.
Okay.
Yeah.
Okay. And then the mutual fund relends it to Bank of America, who then shorts it.
Well, yeah, because say that
Okay.
our 100 shares, say that I get those from you
Yeah.
in an equity swap,
Hmm.
I need to pay you premiums for that borrow.
Yeah.
The central counterparty itself would technically buy the position from you to sell to me,
Yep.
and it would take my collateral and then sell it to you with an interest rate on it. So
Okay.
the bank makes like a 1% commission or
Yeah.
something very simple on the maneuver.
Yep.
And in doing so, once I have your 100 shares, I can take that swap's asset that it represents, say it's GameStop, I can loan those shares to a third party.
Yeah.
And that third party can say that I'm shorting the stock, they can short the stock farther. It
Yeah.
creates leveraged chains on the same 100 shares. But this is essentially how rehypothecations come into play through legitimate mechanisms.
Yeah.
Stop it! Sorry, my dog. Somebody's walking by.
Hey, love that. Yeah.
I got a
Um,
big old wolfy dog. He just doesn't shut up sometimes.
I've just the opposite. I have a dog that never tells me if danger's around at all. Except for one time she barked at my roommate for there's a freezer chest outside my window and she had to get something out of the freezer chest. She was like, "Well, no!" But okay, so the simplest I would say most are equity swaps, right? That's just you're just borrowing shares from someone or
I mean,
bar-
in terms of most things
yeah.
in our schemes of investments and things, I kind of try to focus on total return swaps
Okay.
because that's what most of these records are, is an entity borrowing positions,
Yeah.
making price bets, and all of the profit gets returned to whoever loaned the instruments.
Yeah.
And that's as GME has been involved and XRT has been involved. There's redemption schemes here because at this point, we can thus swap an ETF position
Yep.
from you to me. And as we do that, if I'm an authorized participant, I can redeem that ETF for any of the underlyings involved.
Yes.
And that allows for redemption loopholes. Now, as we go farther in this, the way the hedge funds interact with prime brokers and market makers is essentially the hedge fund will loan not just the assets, but the cash collateral, everything it has, it loans to the prime broker. And the
Okay.
prime broker will technically kind of be the shorter. And this is why everybody hates Citadel. We
Yeah.
can take Melvin Citadel as a hedge fund prime broker relationship.
Yep.
And in the scheme of this, it's a little bit beyond that because Citadel is also a market maker, which means they'll take the broker orders
Yeah.
and they can, a swap gets put into a block trade because it's just an order. And we call them swap trades.
Yeah.
Now, just like what we do with our orders through Robinhood or where I'd like to focus on 21 so it makes sense to somebody not used to this.
Yeah.
As we would order through Robinhood, all of those payment for order flows and everything, it plays a role. But the concept is that the swaps and our orders together get put into what's called a block trade.
Okay.
And these block trades are how things get routed in alternate ways to these ATS systems, the dark pools themselves.
Yeah.
When that occurs, if the block trade itself is rehypothecated, and these swaps, if they exist on the ETFs, now it gives a much wider ability if the swap is on a basket of ETFs.
Okay.
And as I showed earlier, at some point we should show a couple charts and things, but it's so complicated. I feel like getting people just exposed to the terms is the main hard thing.
Yeah, we'll get the church probably a little bit here, kind of showing just how these things exploded. Okay, so can these swaps start to like compound? Meaning, you know, shares are sold that were borrowed into the market. They get repurchased, lent again, sold, repurchased, rent again, sold. And because like in 2024, May and June 2024, we saw some of these swaps with GME at like $84 billion in liability. Like how the heck do you build up that much liability for what appears to be a swap where the main underlying is a company that whose entire market cap is even close to that?
Well, that's the problem is leveraging.
Yeah.
You know, to be honest, a lot of these, like the CFDs, they can leverage 100 to 1 on the price bet.
Hmm.
It's well beyond what you can do with margin and options.
Yeah.
And so,
Okay.
same thing, the total return swaps, you can apply leverage in the middle of the contract.
Yeah. It just gets bigger, just
Now,
inflates.
yeah. Uh, and the crappy thing is, when we look at what happened with Archegos and why that was such a shit show in terms of like what actually unfolded, they were doing ETF swaps. But as we go through the swap records themselves on any of those ETFs, they're in baskets.
Hmm.
And so something to mention is I had that script that I had made that just turned into a skeleton key for DTC data. I'm shutting my door. This dog. I'm in a call right now. I can't do this. Okay, thank you. Come here, guys. Back up. Both of you, shut up. Come here, both of you. Oh my God! Only when I get on here with you do I have visitors.
That's only time I come on to do my shows when my cat shows up to bother the hell out of me. So he's outside at the moment. Okay, so your script, is that your GitHub thing here, the thing that scrapes
Yeah,
everything?
it's comically our DFE. I
Yeah,
won't call him Warren Kitty because on there he's deep fucking value.
yeah,
His Twitter tag or the little username tag was Gamecock.
yeah.
So that's why I called the script Gamecock.
Okay,
But essentially, this can harvest any form of DTCC archive, whether it's SEC or CFTC, all together. And as
got it.
you go through this, if you were going to search for the Russell 2000, you know,
Yeah,
the IWM or
yeah.
the SPY swaps or the QQQ swaps, um, it reveals certain things that are kind of concerning.
Okay,
Uh, they're together. And as the swap itself can be, if it's in the contract with a bespoke clause, they can redeem the swap for any ETF underlying in the swap.
okay.
And as an authorized participant, they can thus, therefore, redeem the ETF for any underlying in the ETF. So there's redemption chains that an authorized participant can do.
Yeah,
And in that, if these are synthetically created through rehypothecation of block trades,
yep.
this technically explains 100% why we have FTDs in the massive amounts that we do, why we have short interest that goes well above the float. Like XRT's had over 1,000% short interest
Oh
at
yeah,
moments,
yeah. I mean,
and it's
yeah, I've explained in the past. When you're shorting an ETF, you're shorting a stock out ETF. It's a real pain in the ass because you're getting like 1/100th of a share, 1/20th of a share. So you have to short the heck out of the ETF just to get one share's worth of damage done for your short. So that's why it has to be 1,000% short or more because it's the only way to get any meaningful movement out of your action when you're trying to short that company.
well, I think it's a concept that most people don't realize. If put options can be used to lower a price, can calls be used to raise it?
Yeah, yeah,
Through forced execution. If me and you think .com bubble,
yeah,
if we used forced calls at a certain laddered mechanism to spoof this price, and then through mean reversion, the price crashes down,
yeah,
there are quants that can specifically make these plays occur through multiple institutions so that we can't exactly go, you did this. And if it does reach the put price, you can negate all of the costs of these forced calls.
yeah.
And this is how price manipulation, in my opinion, truly occurs, is through all of these derivatives that are of these redeemed ETFs that allow for synthetic entries. And that's the only explanation I have for the amount of FTDs that are truly occurring on things like XRT.
Yeah. Hmm.
And it scares me in the
Yeah.
long run because it shows the frivolity of the markets at the moment. Like, what is price discovery if this is truly the market that we're existing in?
Yeah. And do you think, like, what do you think the ratio is of hedge funds and family funds that are dealing in this? Like, how many do you think are involved?
Oh man, because of the way these funds are utilized, I'd like to see how many are not involved.
Yeah.
That's the only way to counter that. I don't even have a count of how many funds there are globally. Because
I,
this is swaps go multi-jurisdiction. You
yeah.
can swap from Europe to here. In the SPY swaps,
Yeah.
there's single stock total return swaps on the SPY ISIN, which is it's the International Securities Identifier number or something stupid. I
Yeah.
forget what the specific term is, but it's directly linking to its Hong Kong exchange listing.
Okay.
And thus, therefore, that swap can be redeemed for not just our national domestic product, but a foreign exchange product.
Okay.
And this was part of I hate to say it this way. I think I'm the only Redditor that had an explanation for the Brazil puts on GME.
Mhm.
Because as I went through the XRT records and really looked through this, the notional for these puts at the time in the swap contracts or the records, it was 3 times the original swap. So I've been trying to figure out how do you rehypothecate a swap?
Yeah.
And it came to me that the only thing more anonymized than the swaps themselves are the block trades. And the block trades, coincidentally, are literally how they unroute or misroute things into wherever they want to go.
Yeah.
And as you know, Archegos didn't operate in Brazil.
No.
So how did those put positions get there, and how did they number above the float? And if how does that manipulation for that stock in a foreign exchange affect our domestic price?
Yeah.
So I dare say, to really uncover the full depth of how these swaps are misused, it does take a little bit of research. It really does, to cross correlate not just our regulations,
Yeah.
but other places' regulations, because we're the only ones with Reg Show and Dodd Frank. So if we can just swap these entities into Caymans or Bahamas or Brazil or anywhere else,
Yep.
then they can manipulate the stock price in a foreign exchange without ever worrying about Reg Show.
Exactly. And you do it through the Caymans and a dark pool combined, and you really have no idea what's going on.
And that's, yeah, there's timelines to the scheme. You
Yeah.
know, it's uh this, I think, would be the time to pull up the GME fund
Okay.
chart.
All right.
Because that gives a visual for people to where you go, yeah, but what do you mean?
Yep. That's the second one, right?
Second from the bottom, yes, sir.
Yep. Okay. Pull up the tweet here, and all right.
I know it's, as I left Reddit, I use Twitter as a giant notepad. So my account can be searched for any keyword at all. I've got like 30,000 tweets or something crazy. This is kind of what I do all day.
Yeah.
Try to figure this game out. So if you can click the first chart,
Okay, it's the super
uh,
giant rainbow one.
yeah, they're all rainbow. I thought that was kind of
Yeah.
cool.
The
Which I
thick.
like this
Yeah.
because
Yeah.
in comparison to RC's tweet of Rainbow Road,
Yeah.
perhaps this is lanes. Now,
Okay.
in this, for those watching, what I did was on the GitHub, I made a script called Lifetime Chartmaker 9000, which I don't know, I thought it was cute, so that's what I named it. But you can enter a list of tickers, and it will then put these tickers from their beginning to current day so that you can actually do analysis across however many funds you want to put up.
Yeah.
This particularly lines up GameStop with every ETF that owns it.
Okay.
And as you can see, the trend matches across every ETF.
Yeah.
And the script pulls from Yahoo. So this isn't some frivolity thing. It's that now we have data to confirm that whatever is controlling the baskets of ETFs is controlling not just the stock, but every ETF that
Yeah.
owns GameStop. And there's not one ETF that holds GameStop that's not on here.
Okay.
And the next picture, if you're willing,
Yep.
that shows mutual funds, which are these are the funds that I wrote the GameStop swap DDs on.
Okay.
It's the exact same thing, and scarily, it might go back farther in time, but it's the same trend line. And that's what leads us to chart number 3, where we overlay the ETFs with the mutual funds, with Berkshire and GameStop.
Yeah.
And that concept of, I don't, this shouldn't exist in a market which allows honest price discovery.
Yeah.
Otherwise, how am I supposed to play any of these ETFs or mutual funds? How am I supposed to believe in what my pension fund is existing if it's predetermined or predestined?
Yeah.
Now, you have the ability to full screen this, because I
Uh,
think you would need to be able to zoom in on the dates.
let's
But
see.
I think there's much importance to show, or you can right click, open a new tab.
Yeah, that's where you
That would
go.
allow
All
you
right.
to
There we go.
focus on that itself. I'm computer savvy, so I got you, bro. And the scheme here is, honestly, it's scary, because when you go, okay, when did these begin? That's what these charts are for,
Yeah.
is to go, when did the trends begin? And for the mutual funds, it goes back to 1985 with three of the oldest funds that hold GME.
Yeah.
For a lot of these other ones, they begin at 2008, and there's other ones that begin at 2001.
Yeah.
And technically, these are all dates where we had mortgage hiccups.
Yeah. Yeah.
Uh,
You can see the dip of the global financial crisis here. You can see the March 2020 dip on this line here. And you can see the January 2021 explosion on this sort of, I don't know, hump on this guy. And then it looks like, all that calmed down. And then we have the most recent sort of explosion here at the end, going to 2025 of the market bubble.
yeah, so I look at these as collateral injection points,
Yeah.
you know, by issuing new derivatives and new bundles of crap, because it's all crap to begin with. The
Yeah.
CDOs were like 95, 90% subprime mortgages.
Mm-hmm.
And for those that don't know, this is something I feel is very important. The difference of prime and subprime. Subprime is where they're issuing a loan or a mortgage to a person that has low credit, low income, and there's a high chance to default.
Yeah.
A prime mortgage or loan is issued to people with good credit and good income amounts to where they don't think that will default.
Yeah.
And that the reason that these CDOs went shit is because the subprimes were defaulting because people couldn't pay their loans or their mortgages.
Yeah.
Now, the scary part is with The Big Short, what Burry showed us isn't exactly just about mortgages. Quote unquote, the loans that back the mortgages are bad.
Yeah.
It's about the loans, the collateralized loan obligations, because they take mortgage loans, auto loans, home loans, all kinds of loans, and they bundle those into their own different obligation groups.
That's what
And
we're
then
hitting
they
now.
sectionalize
Yeah.
it according to tranches.
Yeah.
So as we watch all these subprime lenders like HSBC and certain things now go, they're having credit problems. Yeah, there's major issues with that
Yeah.
because this appears to be the beginning of something very bad starting to unravel that's been on the table.
Oh yeah, all the auto lenders right now are starting to implode because they have subprime loans on all these cars, and they're giving subprime loans to a whole bunch of immigrants. And then the government goes, "Get out of here, immigrants!" So they take the cars to Mexico and stop paying, and then the collateral's gone. No one's paying on it, and no one's making any money on it.
I'm going through your chat. No, active rehab mobility. Can someone translate what he's saying in English? Rehab, if you can ask a basic question from me, I'll answer it for you while I keep this going, okay? Now, it's another point of that I think is very important is looking at when most of this actually began, and that would be either Archegos, but I'd like to go farther back to 2008,
Okay.
about when things really started to go tits up and these swaps began to go and get issued at an exponential rate.
Yeah.
The few years before the crash, equity swaps and credit default swaps were issued at an ever increasing rate until the derivatives markets popped.
Yeah.
And then it slowed down. Dodd-Frank was issued. I think that finished in about 2012. And then as I look at the swaps that are issued and their total return swaps on our meme stocks, like in 2013, Citadel was the only owner when AMC got IPO'd.
Yeah.
And technically, the IPO date is the first date of the first swap on AMC. There's only one institution that owned it at that time that could have played that swap.
Yeah.
That's Citadel. And as this developed, yeah, it feels like baskets started to include inclusions of certain other ETFs and indexes. And this started to affect not just our stocks, but these charts here that we're looking at, the funds that hold all of these investment vehicles.
Yeah.
And sadly, the counterparties and the banks from '08 that needed bailed out as AIG failed, Warren Buffett stepped in, credit default swaps on all the banks, and they're all the same counterparties for Archegos.
Yeah.
And they're all the same underwriters for these funds. And they're all the same banks that are shorting all of our favorite stocks, which is shown by their 13F reports. They got puts on everything.
Yeah.
And so there's levels to how long this has gone on, but it's always the same entities at play. And that's the scary part here, this relationship of prime brokers, ETFs, brokers, and really dark pools. The farther you go in this, it's a black hole in the market. It involves indexes and ETFs, and I believe this is why Burry said the indexes are the next bubble.
Oh, definitely. And the indexes are messed up because you've major indexes like SPY, which 7 stocks represent like 70% of the 500 that are in there. And so you look at the other 493 stocks, and they're not moving. The entire growth is just a few of these stocks, and everyone else is just sort of there.
Yeah, this has been such a weird adventure because when this began, I was like one of the guys that looked into the tweets, and I'm like, "There's something going on here," and it's led me to this absolute depth of things. And I put it in your chat because it's so important. One of the ones that set me off was Ryan Cohen's frog ice cream tweet.
Yeah.
And I'm like, what is frog? And what I had found was a Wall Street Journal article that covered frivolously related output gaps. And it has to do with a country's financial output is not explainable by its GDP.
Yeah.
There's something going on here. There's no mathematical way this is related, so it's frivolously related. And as I went through all of DFE's tweets and I played his tweet game, this is the beginning of all the tweet write-ups. And I had gone through so many companies that as I went through Fentel and I did that Endgame DD video, that to me, it was so important to get all the data in one place. So as I wrote the script and I wanted to go farther into, okay, what are the equity swaps that hold GameStop? And then you start to see all the baskets involved. There's over 70,000 swaps on GameStop right now. On the table, open, completely not closed.
Yeah.
And the amount of those that are perpetual, like they never stop. It's not really something that should exist in a reasonable market,
Yeah. I mean, it just 70,000 swaps on GameStop. And prior to January 2021, there was only 10,000 shareholders in GameStop. That's bonkers.
I know, it's amazing how I don't want to say the effect, but I think it's very profound at the research that DFE was able to do.
Yeah.
Because as I showed up, I didn't know how to research a company. I didn't properly know how to diligence. And I had watched every one of his live streams. So when it came down to me trying to go, do I like what I own?
Yeah.
It's not just taking his word for it. It was, okay, now at least I have a grounded basis. Let's look at the fundamentals. Let's look at their financials.
Yeah.
Let's do a tiny bit of TA to see about entry timing. And I find him to be one of the greatest blessings upon us because he never asked for subs. He didn't want anything, just to put his tweet or his thesis on the table and just allow a group effort to go, if something's wrong, let's talk about it,
Yeah, yeah. You should be able to question everything.
I think so too.
Yeah.
But as I go forth in this, I like to rely specifically on the data because there's so much misinformation and manipulation on the table that I feel like that these DTC records are the only thing I can truly trust.
Yeah.
This is facts. And if I can work forth from facts, then maybe I can find truth.
All right. Okay, so
yes, sir.
We have sort of the basics of what these swaps are. That basically shares are being lent, sold, lent, sold all over the place. The liabilities of which are tied up in these swaps, and they're shifted around the world. right? They're sent to Brazil, they're sent to France, they're sent to Germany, they're sent to Japan. And once they're out of the eyes of the U.S. regulators in these foreign countries, they basically do it all again because it disappears. It kind of resets everyone's view as to where the liabilities are. So we're building up these giant derivatives. All these big investment banks have these huge derivative loads of liabilities. I mean, I can't remember the exact numbers, but someone was looking at Goldman Sachs was like
I like to compare
$600
it
trillion dollars or something.
when
But
explaining this. I always like to bring people back to The Big Short,
yeah,
the casino scene, and the bets on bets of bets on bets of bets on bets.
yeah,
And that's exactly what this is.
yeah, yeah. It's someone borrows a stock to short it. They need a counterparty, right, who lent them the stock, and they have to get money out of that to pay in the meantime for the borrowing, and then they want to get paid back in the end. But the stock gets sold, someone else picks it up, right? They do it all over again. They lend it over again. Like, do you remember S3 Partners? And they sort of list the short interest for companies.
Yeah, I remember when they changed their formula for short
Exactly.
interest.
So up until I think it was October 2020, they would list how many times individual share of stock has been lent out and not returned. And so you would get these short interest views. It would be 170%, 200%, 1,000% on these different small companies. And then in October 2020, as the bubble, or the murmur was starting to grow in Reddit, um, they all of a sudden changed it to they only count it once. So if you are a mutual fund, you lent out a bunch of shares, they got sold, it got counted. But if those same shares got bought by somebody else and lent out again, they would just erase that mutual fund from existence. So they never count it towards anything.
But the problem is you can short a stock in more than one way.
Exactly. Yeah.
These total return swaps, you can use these to short a stock. You can use them to short whatever you want to swap, and you can swap bonds, you can swap all kinds of things. You can use futures to manipulate the bond pricings.
Mhm.
And then in some case, if they're convertible bonds, you can get those for the underlying stock and then go about it that way.
Yeah.
Like there's a redemption there. With these CFDs, as long as there's a bespoke contract in the CFD agreement itself,
Yeah.
you can redeem those for the underlying and short a stock through that.
Man.
I don't look at short interest like it's even a valid metric because it doesn't take into consideration all derivatives on the table.
No, not even close. I
It's
mean,
a, it's it lies by omittance,
well,
and that creates manipulated data for us as the normal individual.
it's crazy. I remember looking at Morningstar report. This would have been in like February, March 2021, and GameStop was listed at, let's say, 30% short. But you look at just the top 20 institutional investors and the top 20 funds. They were short. Like those companies claimed they own more than 150% of all the total shares outstanding. So, if you're going to look at the short interest, you have to see the short interest as, they're trying to fudge it at all times. They can be shorted way more than what they're admitting, and that there's a whole bunch more at play that you'll never see. You'll never see.
So this is
Yeah.
now, please, if you will, click on general. I
Okay.
sent you a link in there, and
Okay.
these are the oldest total return swaps on GameStop, and they predate what you're talking about.
Okay. Which one's this
Uh,
new one down here?
Bottom one. Now, no, the very bottom one.
Yep. Okay.
Okay, so this is an actual swap record. You probably do better on Twitter itself because it would come
Okay.
in clearer.
All right. One sec. Let's go to the Twitter link.
Hopefully it's a 4K picture on Twitter. Let me check. Yeah, it'll come in.
There you go.
If you
Nice
have
and
a
clear.
4K,
Okay.
it'll
Yep.
come in better. Now, it took me a long time to figure this out because they were executed in 2021,
Yep.
modified in 2024, and I didn't understand because they were created in April of 2018 with
Yeah.
an expiry of 2028. They're 10-year total return swaps.
Okay. So here's
Now, what you're
okay.
looking at on this is honestly, this is what a swap record actually looks like. You have the date that it's recorded, the date that it becomes effective, which means that that's when it shows up on counterparty's books and margin becomes applied.
Okay.
The
So this
date
is, this
that,
is our June explosion right here.
yeah,
Yeah.
yes. But the scary thing is, this is a way to short GameStop without anyone who's a normal retail individual
Yeah.
ever finding, unless there's some goober like me and I'm like, I'm going to make a script and I'm going to make sure that there's a way to put these swaps together so that I can go through the records.
Yeah.
And these other filings, the NPORT, NCSR, the money market funds, which are NMFP, those records are so obfuscated in the way that they come, you can't put it together without a script.
Yeah.
And so, but it's scary to me because as these are modifications to old swaps,
Yeah.
what they can do is they can alter how many shares it's worth, alter how much notional currency is behind it, and make sure the swap doesn't default.
So
And this is what BlackRock's Aladdin and Virtu Finance has an AI platform. This is all AI controlled.
yeah.
So it's scary, the level of automation and maintenance that goes into these hidden derivatives. And it's set up in a way to where if they need more shares, they just, I hate to say it, if they wanted to, they can just rehypothecate the block trade another time.
Yeah.
And it's, I believe, personally, understanding how computer networks work. Because I look at the finance network as a computer network, and swaps are just simply how they share resources between IP addresses, nodes,
Yeah.
participants. And when you think of it that way, it's not that complicated. You've just got a spider web of things. That's all. But it's these alternate dark pool trading systems not having insights into those and what they're able to do and
Yeah.
their forced executions and redemptions. I dare say that everything Dodd-Frank addressed, spoofing, ladder attacks, forced executions to raise price, slamming the price by executing certain things on lit exchanges from dark pools.
Yep.
This is the key to manipulate prices on the lit markets. But until everything is included into lit exchange mathematics,
Yeah.
that's, I think, the importance of really discussing swaps.
Yeah.
Is because it shows an individual, well, if we're not going to look at short interest and everybody's like, oh no, shorts are gone, well then what other derivative are they using to short with?
Yeah.
And so we have to go into a deeper level understanding of the markets to find the deeper fucking value instruments.
Yep. So if I'm looking
It's it.
so I'm,
Yes, sir.
sorry, I'm looking at your swaps table here, and we have the highlighted row, the ones that were like with the green, right? And in this whole section, these all expire 2026, May of 2026. What happens if, when in 2018 these were created, and they were created at, and the stock price is at, I don't know, I can't remember when it was 18, maybe $1, right? And come May, June of this year, when these contracts expire, those shares that were $1 are now $40. Like, will it be easy to find a new counterparty to take on that liability, or will the liability
The
return?
counterparties are locked in per contract.
Yeah. No. When
Now,
the
they can
contract
do a credit
expires.
default
Yeah.
swap
Yeah.
on the derivative itself. So, like, you can do a credit default swap on a mortgage-backed security.
Yeah.
You can do it on a CDO, or you can do it on an equity swap itself.
Yep.
And this is part of what made AIG fail back in 08, is that they issued credit default swaps on the CDOs. And as so many CDOs lost value and their clients needed credit injections,
Yeah.
they didn't have enough credit for that. And that produced a margin call.
Yep.
So there are limits to what these individual participants can hold. If this stock goes to $2,000,
Yeah.
all of these things go tits up.
Yeah.
And
That's what I'm thinking.
I was trying to do the math on what it would take. I think it's about $150 makes all of these fail, but it's complicated to try to figure this out. The
Yeah.
function is not. That's why I try not to focus on the math, because
Yeah.
then we're going to CFA and you need to take classes because we got percentages and
Yeah.
fucking damn Greeks and things. And it ties into Black Shoals,
Yeah.
you know?
Hmm. So I'm
But the key ingredient here is, as we see, everything on this list is a modification trade.
yeah.
And you can see the execution stamp of the modifications, but that's the interesting part. Expiration is not the same as maturity.
Hmm.
This is how they're different than options. Expiration just means you can't modify it no more.
Okay.
They don't report the maturity dates.
Yeah.
They hide that from us. Because if we knew maturity dates, we could play Dr. Burry on these.
Yeah.
And so expirations, these things exist until maturity. It's just they can't modify the terms.
So
The
be
expiry is
okay.
expiration of when you can modify.
Okay. So it looks like all like this whole chunk here is a whole bunch for May 2026. Got a couple for January of this coming January, and then a few that are 2028. And then after that, they can't modify these anymore. So the price, so whatever liability gets locked in at that point.
You can see on the right side where I highlighted green, these are single stock total return swaps.
Okay.
So we know what kind of a derivative it is.
Yeah.
Now, as I circled what's called a unique product identifier, I guess I'll pull that up for you right now. This is where it turns into a rabbit hole because that represents the swap identifier itself. And as we go through these UPIs that involve GameStop, oh shit, the two biggest UPIs on GameStop contain 1/5 of all stock identifiers in the entirety of the market. Like the depth of how many are here is very scary. The total amount of baskets in the GameStop basket swaps, there's 1,023,000 different baskets.
Jesus.
I wrote a script. It's a special function in Gamecock that it does take account of every swap and every identifier in the swap.
Yeah.
And the UPIs for GameStop is 1/5 of the entirety of my swap archives.
Jesus. Okay. Another question.
It's scary, the scope of how integral and how centerpiece GameStop is in this black hole of derivatives.
If I'm looking at the price line, right? You got the highlight greens, the 246.81. Is that the value of the swap itself, like in millions, or is it a share price inside of it? What's
Generally,
that
if there's single stock total return swaps, you see how it says USD next to that?
Yeah.
And then you see settlement currency leg, but it's for 5 shares.
Mm-hmm.
That would be the price of the contract itself.
Okay.
Now, for us to figure out where to the left of that, it says notional amount. That's column. What is that? HI. Oh, hell. It's column O. It says 5 USD for 5 shares.
Yeah.
The problem is this is how they hide who is doing what.
Yeah.
As in, that can be backfilled later. They can just report how much it cost at a later date.
Yeah, because the other ones have like
of the executors.
$2 million, $3 million on some of these, and others are 5.
Yeah, the 5s are an anomaly, and honestly, until recently, it was kind of a puzzle between me, Bob Smith, Ultimator 5. You know, all of us kind of get together once in a while and just bash heads over all the data.
Yeah.
But none of us had an understanding for the 5 until I really grilled Grok about, hey, regulatorily, why would these exist? Do they always have to report the notionals and the quantities? And it was like, no, it can always come back, report that to the regulators. But generally on terminations, they do that to protect the identities of the swap participants themselves. The entire system is set up to be anonymized, so you can never tell who's playing the swap. It's set up to protect the banks and the prime brokers and the market makers.
Yeah. I guess they're
Same way in
protected
the block
until it
trade.
explodes, huh?
Well, then, you have
Yeah.
margin defaults, but for me
Yeah.
to sit here and try to figure out who played each of these, that's the only thing I can't figure. Oh, here, I'll give you the Easter egg. I'm going to look it up right now
Okay.
because this is the importance of looking up the import filings, and being able to really dictate what are the instruments being played. Now, on one end, I'm going to come over here. I'm going to send you an actual fund
Okay.
semi-annual report, and then I'm going to pull up an import report that comes from, the actual script itself.
Okay.
I don't like pulling these up live for you. I feel like I'm delaying your time.
That's okay. Okay. So I have the one from looks like Citibank.
Yes, and these are so you can go to the fund annual reports,
Mhm.
and it will tell you the swaps that it's playing.
Yep. And I mean they're giving them great names like Zombie Company Basket. It's pretty
Yeah,
literal. Yeah.
did explain kind of what it's even that underneath that in the annual filing, it does explain what instruments are in the zombie basket.
Yeah.
But that's, I guess, the problem here is that until some dork comes by and does what I do, this would be I'm a data hog, so this might make sense when you see it. It might not. I sent you one more link in Discord.
Okay.
It's crazy how much crap I've looked up over time. And so with that link, these are actual exported CSVs from the Gamecock script to show issuers of the swaps,
Yeah.
holders of the swap, and borrowers. And you can see return amounts. So with that, this is how I knew to go into the Citibank annual report or the specific import filing for that particular entity.
Yeah.
So these are all the total return swaps that are played by B of A, Morgan
Yep.
Stanley, among other entities. And
Citibank,
this,
UBS,
this
BNP
screen is
Paribas.
scary.
Yep.
What this shows is banks playing credit default swaps on other banks in a circular manner,
Yeah.
to where the things that are propping them up are based on these synthetic bullshit derivatives.
Well, this is what's
Otherwise, they'd be
doing.
insolvent.
Um, um, First Brands, the auto parts company that declared bankruptcy because their money's gone, right? And Jeffries, supposedly they had $2 billion in account Jeffries, and it's just gone, and they weren't able to pay any other stuff. And it's being revealed that Jeffries finds companies that are willing to take sort of these subprime, maybe double A loans, triple B plus loans that are kind of borderline junk status, and they will lend them the money, and then they will take out the credit default swaps on them that will promise to pay out more than what the loan is for. And they started doing this with all their companies. And so I was reading an article last week about how regulators are terrified that this is what all the big investment banks have been doing is they've been incentivizing these companies to not be able to pay their loans back because they'll make more money off of them if they don't, and that it's all going to come to a head, and we're going to have a 2008 situation where all these credit default swaps can't pay out because they promised too much money.
Yeah, the whole thing is scary, man. In my opinion, the
Yeah.
depth of this is absolutely. I don't know how they don't have enough assets to cover the leverage,
Yeah.
and that's what kind of scares me about this. Like we've all been taught that there's a giant payout coming, but as I go through this data and really, really dig into it, I don't know, man. I don't think they have it to give it to us based when I go through everything here.
Yep.
I
Yeah.
think that when things default, there's a digital system in place to replace it, and I don't know. I'm not going to say that there's not a MOAS because if it comes in stages Yeah, one of those stages would be a MOAS.
Yeah.
But the real concept of MOAS, when I show you all this contagion, what survives?
Yeah. Basically the money printer. That's that's the one thing. They just spool it up and we get our hyperinflation. And you know, I don't know. I don't know beyond that, because we're talking trillions upon trillions upon trillions upon trillions of dollars in liability in just one simple bank from the swaps and derivatives market that they have.
It's not even about current banks. I'm going to send you one more link.
Okay.
One of your chat members did say he asked if you could full screen your browser. He
Okay.
didn't think the stream was set up for 1080. So as long as we can try to deliver them clear pictures.
Okay.
Uh, this is the bread on the butter. Bottom link. I got you.
All right. All right.
Yeah,
So
that one. Yes, sir. That one.
All right.
This is where it gets scary because what are the entities on the left?
Vanguard, Guggenheim, Vanguard, American Pension, GNLC's Lippman Gregory Funds Trust, BlackRock, PIMCO, Metropolitan West, Bridge, PIMCO, Thrivent, Vanguard,
These are the
Transamerica.
biggest names in the repo markets.
Yeah.
And so, honestly, now go left one and see what it is that they hold.
Yeah.
No, go left one picture because you're
Oh.
on the second picture of the tweet.
Oh, I am? Shit. Sorry. I gotta go here. Go that way. Boom. Oh,
Yeah.
there we go. All right.
So the way that's interesting, the way your browser's set up, because even if you full screen the picture, it like cuts it off.
Yeah.
It must be the way your stream is set up. But what these are is Wachovia and Washington Mutuals.
Yeah. And they don't exist.
And they're being held right now in import filings. They never defaulted.
Yep.
If it helps, I'll just send you the picture in Discord of the Wachovia holdings. And these are alive right now. And that's the main problem. Most of that is fund information in case Anons wanted to, send them pizzas like we did back in 08 or something. Hackers movie style, just sign them up according to the phone number with just prank gay calls with porn guys. Whatever they want to do. Hackers hack.
Yep. Yeah, they're all
concept.
Wachovia.
Yeah, and these are sub 08 trusts that exist right now because these were all subsidized and they exist in the liquidity Fed funds.
Yep.
They didn't let it bubble.
Yeah.
They did to Michael Burry 2008 what they did to us in 2021.
Yep.
And that's, to me, the scary thing. That means that we have two bubbles on the table. And two bubbles at the same time is exponential. That's fucking financial collapse.
Yeah.
And this is only one entity. I can show you Bear Stearns, Washington Mutual, Wachovia, Citigroup, mortgage-backed securities and trusts. I can show you so much to where you wouldn't even want to invest in anything anymore. They never actually let it pop.
Yeah.
And that's the problem. When we go back in time pre-2008, that's not the first bubble we went through. 1972 led to 73, 1987 or 1980, 87, 94, 01, 08, 2015 there was a hiccup, and then March 2020.
Yeah.
And then comes GameStop, another black swan. And so what we have to talk about from here honestly is in 1998 long-term capital management. When that defaulted, all of those same counterparties were responsible for 2008. And that came from that's one of the two founders of that created the Myron Scholes or Black Scholes model.
Yeah.
They're completely integral to how these derivatives are even valuated. So it's really scary to me to see how these asset-backed mortgage securities that you're looking at here became CDOs.
Yeah.
And how those CDOs, even with credit default swaps, most of them failed. And then they just changed their scheme over time. But without creating a script to be able to parse the records, what they did was obfuscate all the reporting filings to where a normal individual can never just make this output for us just to observe.
Yeah.
And so it's, I've always felt it very important. I don't have subs. I don't have, you can't donate me. You can't buy me a coffee. I always felt that it was very important that I did not receive any gratuities so that I could actually sit here and just, hey guys, it's about the data. This ain't
Yeah.
about me. And when you have this depth of data, we're so much farther than what Burry tried to explain or show. This is the game. How did they survive from '08 to Archegos to now? And that's the importance of those ETF charts that we discussed earlier. That shows at this point what they're choosing to do is systemic wide.
Well, it's pretty
And
crazy that all the central banks around the world are basically losing money at the same time when they never did before. And the liabilities that Credit Suisse created for the Swiss people, it's something ridiculous. It's like $60,000 a citizen in just that one bank that UBS takes on, and the Swiss central bank is just, I don't know what they're doing. They're printing. They're losing money like crazy trying to keep everything afloat. But it just seems like at some point someone has to see if it all zeroes out in the end, right? Because we have $900 trillion in debt globally, and we have $81 trillion in GDP. It just doesn't quite like even out in the end. It just seems like it's just growing and growing and growing.
but as you stare at these Wachovia trusts, do
Yeah.
you realize that's a counterparty of AIG?
Mm-hmm. Hmm.
That's the scary thing is
Yeah.
they're just holding up AIG's counterparties.
Yeah.
That
Wild.
part. As
Yeah.
AIG fell, the counterparties were on the hook. Goldman Sachs, Deutsche,
Yep.
Barclays, UPS, JPM, Merrill Lynch, Morgan Stanley, B of A, Royal Bank of Scotland. As I showed earlier, BNP Paribas,
Yeah.
they were a
Oh,
counterparty of AIG,
let's
Citigroup, Credit Suisse, and HSBC.
let's pull up that one real quick before we log off. That was this guy, I believe. Okay, this is the one you were showing me the
Right
average share
above the
price.
highlighted one. Right there.
Yeah.
It's, yes, sir.
So this is the swaps with these particular institutions with GME, right?
Yeah,
And average share price for GME for BNP Paribas, which is a French investment bank, $107,000 a share.
and that's for 19,000 shares.
Yeah.
That's the average price paid.
Just
Their return on those
insanity.
positions was 97,811%.
Bonkers. Absolutely bonkers.
This isn't, everything else is mutual funds and everything else, but
Yeah.
that one particular entity, those aren't options. Those are straight up share purchases.
Yeah. Crazy.
That it's insane to think of how deep this actually goes, and that potentially all of these entities have controlled our information flows so that we never looked at all the places I'm looking at.
Yeah.
I have one more tweet to show you, and
Okay.
this would be if you scroll all the way down, I'll show you what's actually in the SPY swap baskets.
Okay.
Because my dumbass, I went through, isolated that tweet right there. Yes, sir.
Okay.
Now, I went through all of the SPY swap
Wow.
records for equity swaps under SEC,
Mhm.
and I isolated all of them, wrote a script that would identify. There's no way your followers can see that.
No, yeah. There's a lot in here. Just trust that.
Uh, what this is showing is on even second line, SPY QQQ in a swaps. First
Yeah.
line, SPY QQQ. Third one, SPY and XLI. That these are the keys, because if you can manipulate and rehypothecate these baskets, you have rehypothecated naked entries into the ETFs and indexes, and you have naked entries into any redemption of the stock. Because if it's rehypothecated to begin with, it's rehypothecated to end with.
Yeah.
And that results in not just FTDs, but naked shorts. And this is absolutely how the naked shorts are created in the first place.
Yeah. Wow.
I just simply treat these swap records like they're network transactions, and I treat the financial network like it's a computer network. And just like if I'm going to go ahead and analyze my computer network, I'd use Wireshark and I'd get nitty gritty with what's in the packets. That's how I treat swaps.
Yeah.
And
See
through
what.
that correlation, I feel like it makes it handleable for any individual to go, well, if these are rehypothecated, these are naked entries into all of these.
Yeah.
And I don't know how much you know about Archegos. SPY, QQQ, XLF, uh, EEM, and there was one other one. These are in the Archegos leaks, and they focus those. But these swap transactions are specifically in the Archegos leaks, January 6, 2021, and you can cross correlate.
Hmm.
And that's the dumb thing. There's so many people around us that they mislead us and go, swaps don't matter.
No.
But we've sat here talking for over an hour about it.
Yeah. No. The
Why do they
swaps
not
are
matter?
really hundreds of trillions of dollars in liability. It's crazy. All right. I do have to run though. Um, we might be able to
I
do a
appreciate your time.
yeah, I might be able to do a show in like a week or two and go nittier grittier into the specifics of these swaps. Does that work for you?
It would. I would ask that when you whatever your streaming thing is, I know that
Yeah.
you like this Mario Brothers world background, but there has to be a way to full screen your actual window to
I
where your viewers can watch high quality.
yeah.
Because almost everything I have snipped is 4K. 1080p just murders it.
Okay. Noted. All right. Cool. I want to thank you for coming on. You gave us a glimpse behind the curtain here, and it's still like the numbers are huge. The liabilities are strange, and everything blows up. It's probably the end of everything. So, um, fun. But I
I
want you to have
appreciate your time very much.
my pleasure. I don't know. Maybe we can make a show that's longer than an hour next time around. But I want to thank everybody for joining us. I want to thank Always Sad But Truthful for jumping in here, and I hope you're all well. Everybody, I will catch you tomorrow for a show, and we'll get into more news and current events and everything else that's been going on that we missed yesterday because my dad's birthday, and today because we're talking swaps. All right. Thank you so much, and I'm gonna hit the outro, and we're gonna run away. And where is the outro? I lost it on this page. It is right there. Boom. Oh, my image is over the outro. There we go. All right, and